we talked about technology, about debt, about financing, but the critical element of investment revolves around capital, equity capital, capital that can take a risk, and capital that believe that agriculture might be an option or an opportunity. So I'm going to start with you, Russell. In terms of your portfolio, Russell Stone is well known in the industry, but give me a bit of background in terms of specific your portfolio, what it's about, and where do you invest currently?
First of all, maybe a little bit of a background. So we have two international investors, AAA, and we had to basically try to make a road into Africa with primary agriculture and farm gate on. And so first of all, you need to imagine this international guy that's got a pile of money, or pile of money, and he needs to deploy it all over the world. So take the world map and decide where to go. And to a large extent, Africa would only get about 1 to 2% allocation to it. So what country in Africa? So in the past 13 years, we went up to about 30,000 hectares of arable land that we planted ourselves, and that cycle is gone. And downstream on, we did crushing plants and pigs and so forth, which we're very excited about. So in short, we deployed around about $150 million in the past 12 years in the primary agricultural sector.
But it's not only primary agriculture.
No, not at all.
There's services around agriculture as well.
Absolutely. I mean, just on the pork side, we have invested in genetics, the animal feed side, the farm, abattoir, deboning, processing, and retail. So the whole value chain, yours is gone as well. And so the whole value chain play.
If we look at from your point of view, so if you talk to an investor, and I want to get back to the principle of an investor and what drives them and where does the capital come from?
I mean, I was listening to the previous panel, and to some extent, the banks get a raw deal. People do not realize where do the money come from. I mean, first of all, the bank's money is the guys that deposit it at the bank. It's yours and mine. Now we ask the bank to take our money and go and give it to somebody to buy seeds, put it in the soil. It might not rain, lose the money, and the bank will lose my capital. I mean, capital originates from a part of labor that you don't utilize at the end of the month. That is savings. So actually, capitalism is laboralism. That part of labor that you save, and then that labor you want to use one day when you're old. So I ask somebody to please give or take my capital, my savings, and give it back to when I'm 65, 70. And now somebody wants to take my capital and give it to somebody without security. Are you out of your mind? I mean, that is silliness.
So that in that respect, sometimes the banks get a raw deal simply because people don't understand whose money they're actually doing business with.
It's your money. Now, would you, I mean, I just came from a board meeting this morning. We've got a business in Zimbabwe. And the guys said, please, would somebody give me money to go and invest in Zim at the moment? We're selling confidence. I mean, Africa's single most important export product is confidence. So, I mean, how do we get confidence to people, yours and my money, to invest in something? It's common sense. I wouldn't do it. Well, I did it, unfortunately.
Jannie, Wippold is, over the years, became heavily involved in agriculture. And I want to talk a bit about your investments and what it all entails.
Shall I grab that?
But Jonaberg.
Okay. Thanks to you. I think before I start, I must just talk a bit about Wippold. We're quite unique in this industry because we're a black women's group, and BEE companies are not normally known for driving entrepreneurship with their own capital and taking risk. So Wippold was founded 27 years ago in 1993 as the first black women's group. It was long before there were charters or BE codes. The founders just had a vision of empowering black women and what might come one day. We've got about 200,000 direct and indirect shareholders in all 9 provinces. We were listed from 1999 to 2003. So the group's got quite a long and rich history and has learned a lot over the years. And when the opportunity presented itself, converted from a group that had operating businesses to an investment group in 2003. And our investment philosophy is we're a commercial investor at its core. We need to make returns for our shareholders like any other company. But we have the benefit of being able to take a very long-term view, having patient capital. We're very active investors. When we target an industry and we don't find an investment opportunity that presents itself, we, in the past, in 3 sectors, have decided to go greenfields and start our own businesses. We did it in financial services, we did it in cement with Mamba Cement, and we're now doing it in agriculture, in arguably one of the more difficult parts of South Africa. As far as our sectoral focus is concerned, at the moment, agriculture is on top of that list and has been for a while. We're very excited about the opportunities in the industry with all its challenges. And in agriculture, we have, the past 12 years, made 2 investments and have started 1 business. The first investment we made was buying into Hans Merensky Holdings, which has a timber business called Merensky Timber, but more importantly, it has Westphalia, which has a phenomenal story, and I always say to people, it's one of those untold stories that we need to talk about, because it started with a small farm in Mpumalanga left by Hans Merensky, and it is, I think today, after they did the transaction with the Harvard Foundation, globally the #1 distributor of avocados. We've been in that business since 2007, and the next foray for us into agriculture, and these were the hard miles, was when we became aware of the issues around food security, the opportunities in agriculture, the challenges. We were also very familiar with the Eastern Cape and the vast stretches of land there that are very arable land, land that's very suitable for maize and grain production. So we started a pilot project with the local communities on rural land of 69 hectares in 2012. And the project was so successful and grew to today where we are, I think, the largest maize farmer in the Eastern Cape. We have 2,500 hectares under production, all in partnership with the rural communities in Kentani and Bashe. It's been a great journey. It had lots of challenges. The belief was from Whipple's side that with subsistence farming, it probably has its place, but you can put food on the table. When you try and use farming as an instrument to create jobs, you have to be competitive nationally, globally, and participate in mainstream farming. So we decided from the beginning that we will do large-scale mechanized farming. And we aggregated from 2,300 odd landowners, plots, aggregated them. The largest block is just over 200 hectares. There are 30 blocks. And the support we have from the community, and it has been a long journey that's been worked out with them, but an extremely productive one, has been fantastic. So where in a normal farming operation you have a farming operation and everything that goes with it. We have that operation, and we've got a community unit that spends time with these communities and makes sure they look after the fields, they are happy, they understand that everything is transparent, and they get rewarded for it. And there's a bonus and a penalty system to make sure that the crops are looked after, and it's working extremely well. So we're very proud what we've achieved there, and our vision is to take that to 4,000 hectares in the next 5 years. We are experimenting with livestock trials, other crops. The value for us of having this, now we're a commercial investor, so one might ask, that's high risk. What are you doing there? The value for us is, and this is where agriculture is beautiful, looking at our other sectors that we've invested in, you can have social impact together with commercial return. If we take a 10-year view, we will have a maize production with scale in an area where there's no maize production. We can look at downstream opportunities, and that's where our model then kicks in of eventually making the commercial returns. Agri built for us, and it's our first step in downstream, if we can call it so, a bunker, a 15,000-ton bunker that's being commissioned in the next month. And it kick-started our presence in the grain business. And then last year, we concluded a transaction where in a consortium, of which we're the largest shareholder, we bought all the storage assets, grain storage assets of Agri in a very innovative transaction where those assets were basically...
That's the silos.
The silos. Silos and bunkers. Where a very critical and strategic asset on Agri's balance sheet was sold and wrapped with all its commercial angles. And we were able to raise funding on a ring-fence basis with a cost of capital lower than what Agri would achieve, or any other company had it been part of their business. So it almost, for us, viewed as a financial asset, not an agriculture asset, the way that it's packaged. And that's the kind of innovation and new things in agriculture that we've seen, and it excites us.
I just want to come back, Jannie, the maize operation in the Eastern Cape. That is a commercial farming operation without ownership being involved on your side.
That's correct. So it is communal land. It is notionally owned, and I say notionally because they do not have title, but they've got use of the land by 2,318 so-called landowners. And it's an interesting question because can one do that model on something like orchards, avocado orchards that we indirectly invested in, that requires capital, a long lead time before you get income? And the answer is probably no. It works on cash crops, it works on maize. Because if this block doesn't work, there's a number of people that want to get in and you can chop and change. And the integrity of the operations, sustainability is not affected.
Stephan, you involved in the advisory side. The advisory side for capital, for transactions in the agriculture space. First of all, give me a bit more background about where you guys are involved. And what would you say is why are you involved in agriculture specifically?
So Theo, thank you very much. As you correctly point out, we in the corporate finance advisory space. In that business, we specifically advise your relatively larger corporates on various transactions, whether it be empowerment transactions or raising capital, etc. Some of the examples of the transactions we've been involved in just last year, I think Jannie just mentioned one, so we started probably 2 years ago, maybe longer than that, with just taking the idea to Chris around just his allocation of capital and how one can actually optimize that and whether it is currently in the right pockets. So that's one example. We've advised GWK quite recently on the restructuring of the share capital. We've been involved with the acquisition of VKB, of the BKB shares, also the Grunrod shares that has been disposed of last year. So those would be typically the type of transactions we would be involved in the agricultural space, and large corporates making quite large investment decisions. And then we also have a fund business where we, on the venture capital side, invest on behalf of investors into more smaller type of ventures. But more recently, we've raised a private equity fund where one of our key focus areas and sectors that we focus on in that fund is in fact agriculture.
Why agriculture, Stephan?
I think from an investment thesis, it's quite interesting. So you ultimately have a product that there's a need for and that is being consumed all the time. So from an investor's perspective, you always want to be there where there's a demand for the specific product. I think secondly, from a South African context, our GDP growth outlook is not that great. But agriculture have a large export potential. Jannie, you mentioned the avos, for example, citrus, berries. There's so many different type of commodities, and one can actually link your sales into economies where there's much better growth than in South Africa, which makes sense. It's also a place where we can earn foreign currency, whilst you have rand input costs to some extent, and it's good for margin.
Russell, the agriculture sector relative to other sectors, and I want to talk about risk, return. Why is that a sector that draws capital?
Well, first of all, I mean, we have to unpack the whole thing. So agriculture is an asset class, and I think people don't realize it's one of the biggest in the world. I mean, if you take how many private wealth in the whole of the world is just in agriculture, it's not a corporate instrument, and it's very few people playing in the corporate side. But if you look at the asset value of agriculture all over the world and how many people are dependent on agriculture, it's quite amazing, and it's overlooked totally. So in the world's balance sheet, and it's always, I don't want to go off the topic, but the story of Gini coefficient, and 1% of the world's assets is owned by 10 people. It doesn't make sense, because the total world's balance sheet is $285 trillion, and if you add all the guys 1% up, it's 10 trillion. I don't know how to get to that sum anyhow. But so agriculture is a huge wealth creator. So the big reason is agriculture is a unique thing. It's always been something between an income statement and a balance sheet. So normal agriculture, especially, you've got three types of agriculture. You've got extensive farming, migration farming, and intensive farming. And farmers are constantly in this migration process from trying to get the income statement right. But the whole nice thing of agriculture, it's an infrastructure play. Because every time you start or buy a new farm, you look at the soil quality, you improve the soil, you put capital into the soils, you do the fences, and it's a strange thing, and I'm trying to say 20 things in one sentence, an old problem. But so farmers try to get to the income statement whereby they can make 16, 17% return. If you take extensive farming, you will only make 3 to 5%. That's cattle and dry land. But your capital growth, because you have a constant yield improvement on the farm through technology. And it's really since 1952 that you see a capital growth in the underlying value of land. And you end up always with avocados. I mean, we allocate capital to avocados in Australia because at the moment we can't see any long-term safety in land. So all we do is we allocate capital where we feel it's safe. I mean, you need confidence to on the capital issue. I mean, it's our own money, and some is investors' money and so forth. So agriculture has a natural technology. All you see is technology. Like I said to you earlier, maize in America is now 600 bushels per acre. The average is 180. We know where we're going, so we can discount the land value over a period. It's a linear line you want to be. But please let me be there for 50 years and let me put the money down. I mean, the unlocking, we're sitting on debt capital in Eastern Cape. Imagine what we can do in Africa if we give title deed to Mozambican coastline. How much would you change the balance sheet of the whole of Africa overnight? So agriculture is a balance sheet play. It's an infrastructure play. You need time. And
You touch about the point about why you would allocate capital to AVOs in Australia. Can you elaborate on that
well,
a bit
I mean,
about the
it's simple. When I looked at it 5 years ago, I had to look at the land value in Pongola at 160,000 rand a hectare with water, or Northern Queensland. And the price was the same. And Zuma and everybody was making noise. What would you choose? No, it's a no-brainer. I will take my capital and put it elsewhere. Capital is like water. It flows to where there's least risk. And Africa needs to realize we can only export confidence. The rules of the game need to be sure. You can't go and run on a soccer field and one day the offside rule while you're playing change. How can you change the rules of the game while you're playing?
And that's about policy certainty.
Of course, it's a no-brainer.
Now, Jannie, capital is a coward. Let's agree to that. Capital, when there's risk, capital disappears. And capital will go and look for, which is the right thing to do. That's why things grow, but capital will disappear if there's risk. Unless the risk is priced rightly, but let's not go there. From your point of view, Jannie, how do you manage the risk that's perceived to be involved in agriculture? Not perceived, the real risk and then the perceived risk.
I think we're very sensitive to risk, and it's part of our DNA whenever we decide to start businesses or even to invest in the industry, to understand the risk very well. And you'll find in Whipple's history many examples where we really dive deep into industry, paid school fees, understood the dynamics, etc. So I think, firstly, you've got to understand the risk. Secondly, agriculture, of all the industries that we are in, is probably one of the higher risk industries, obviously, we all know that. And therefore you need patient capital, you need time, you need to be able to absorb mistakes you make, cycles, be able to build scale. I think scale in agriculture is really important over time. And then when it comes to the more traditional ways of mitigating risk, in our world we try and get off-takes, we try and look at things on a portfolio basis. If I look at our maize operation, we've got the silo business on the one hand, that is stable cash flows, it's almost a financial asset, and uncorrelated to any part of our total portfolio. It's about volumes of maize through silos. And if there's a dry year, there's imports that fill those silos. It's a very interesting...
They still go through the silo.
They still go through the silo. On the other hand, we've got this high risk, but very key for us, Eastern Cape farming operation, no tenure of land, but over time, doing very well and not far from getting to break even. So it's about a portfolio play as well.
I just want to ask a question. I mean, if I fly over KwaZulu-Natal, I don't see dams. If you fly over Free State, you see dams. Why?
Any idea?
Because...
Well...
yeah? So, first of all, if you don't own the land, you would not put energy in to build a dam wall and form capital. And if you don't own land, you will never spend energy to improve the land. And that is the big thing in, I mean, Eastern Cape is such a beautiful place with unbelievable water. And why don't we see dams being built and so forth?
So what I didn't talk about is the challenges of farming there. The road infrastructure is very poor. Bridges that you need, there are lots of rivers. There are no dams, but there are lots of rivers. You're far from the agriculture hubs when it comes to services. Clean water is a problem. There's water in rivers, but you don't have access to clean water, etc., etc. So it's a challenging environment.
Water next to the Vaal River either.
Yeah.
Stephan, let's talk a bit about advising investors or advising corporate clients. When they look at agriculture, what is your view or perception in terms of risk, return, required rates of return? How do you view that?
Yeah, I think maybe the first thing is, and I think Jannie, you just touched on it. Agriculture it's a different asset class than what investors typically want in the listed space. In the listed space, you want cash flow, dividend certainty, all those kind of things. And agriculture is a much more longer term investment. So you need to ensure that you're able to weather down the cycles and the different seasons. And it's, as I say, much more akin for a private type of investment. I think in looking at the investments, the moment we call it a ham in the sandwich factor. The moment you're in a space where you're a price taker on both the input and and on your output side, it's a very difficult business to be in. You need to be in a business where you can actually make your market, especially on the sales side, and control your costs on the other side. And that's a big factor in agriculture, and especially the type of commodity you're in. In some type of commodities, you're almost driven into that specific space because that's just how it operates in a global environment. But I think going forward, especially with more specialized commodities and things like what have been discussed here, the addition of information, or what's the value of information, and how you can use that to actually increase the value of your product. And I think that's where we see a lot of companies actually now looking at and where they want to go, is to say that that's probably where we're going to make extra margin because we can actually make the price. And it's a big factor in agriculture. If you can start to make the price, you can deal with a lot of these long-term risks over time, where otherwise global prices really determines what you ultimately will make from that investment.
I am going to ask you all two more questions, but I'm first going to just ask the audience if there's a question or two from their side. The next two angles I'd like to take is, number one, if you get presented with an investment opportunity, what's the kind of things that you would look at? What's the kind of things that an investment should fulfill or have part of the criteria, number one? And number two, in order to increase attractiveness of investment in agriculture in South Africa, what can be done to assist and attract that? That's the two questions. But first of all, is there any question from the audience? Anybody with a question at this point?
Darso.
There is a question there. Yes. There's a mic on its way.
Hi, I just want to know, how much is investment in technology, agricultural technology companies, part of your play in terms of positioning for your broader portfolio of companies or investments?
All right. Thank you very much. Any other questions? All right, technology. I think Russell, would you like your hand at technology?
Well, I don't want to invest in the technology. I want to get the benefit of, or the derivative of, technology. And that is why I like agriculture so much, is that I don't need to do too much. There's so many guys out there now that thinking on our behalf to develop the technology. We just want to use it. For instance, in the pigs, and Johan is here, the pigs is such a great thing. We know that the genetics is already at 33. But imagine what we can do in housing in pigs today. We can put sound in, we can put cameras in, heat sensor cameras. We can see that when or one of the pigs are getting fever and so forth. So the technology for the next year, you want to be in agriculture. I can't see why you want to buy equities or anything else. Agriculture is a place to be. Give me just 50 years to...
But it sounds almost like when Johan Rupert started the wine production with the Rothschilds, and they asked him, Johan asked one of the Rothschilds family at some point, so when do we start to make money out of this wine thing with you guys, Rupert and Rothschilds? And the Rothschilds said to him, usually by the 6th or 7th generation.
And that is agriculture.
Yeah.
It's a long-term wealth creator.
I wonder, Jannie, if we talk technology, and perhaps that links to that question, The success with Westphalia is technology, but that's a different kind, and that's not investing in technology as IT tech. That's other technology.
Yes, Westphalia has a very interesting story, because when Hans Merensky left this farm and some cash when he passed away, I think it was in 1947, he left those assets to a foundation with a specific instruction and vision that a lot of the profit should be plowed back into R&D. And I guess it was a forgotten foundation, and for many decades they did exactly that. They developed cultivars of I think avos and timber, etc., that stood them in good stead, that made them a world leader when it comes to their plants and their orchards, etc. And I think people only started realizing the value of that in the 80s and the 90s. And that created the platform of what Westphalia is today, and Merensky, and went from a small farm in Sandton to a global business in...
You noted the interesting stats about the South American country.
Yes. So when they were at the point where they, I guess, have kind of felt they saturated in the local market in terms of avo production, and they felt the pressures of the big retail groups in Europe wanting to deal with one seller all year round, being able to supply all year round. They then bought a trading business in Europe and started trading avos, and used the information out of that to start establishing orchards in South America. Did a big acquisition in South America 4 years ago. They are now the largest avo producers in Colombia. They're big in Chile, in Peru.
So I think technology runs through it, but Stephan, specifically investing in technology, is that attractive, or rather the companies that will benefit from technology?
Definitely the companies benefiting from the technology. I think technology from an investment case is always so difficult, because you can always get Ubered. So it's so quick for someone to do something more clever than you, and that industry is so fast. You need to be big, almost like the Amazons, the Googles, etc., to almost develop that, and they give you all those tools for almost nothing, where you can actually, in your business, create the value from that. So most definitely rather in the wealth creator that it actually unlocks.
Jannie, if you look at...
Sorry, can I just add something to that? I think the most basic example of technology is our maize operation in the Eastern Cape. At Wippold, although we had aspirations to get into agriculture, none of us had ever farmed maize. And in 7 years' time, through technology, through working with good technology partners, and we didn't use the highest of high tech, we used basic technology, we managed to get a serious farming operation off the ground. And leapfrog, if it was 30, 40 years ago, you had generations of learning with farmers to understand how farming works. That's what technology did for us.
Jannie, or let's start with Russell. If you look at the investment, somebody would like to present an investment case, what's the kind of things that you would that you take into consideration that is more important than other stuff?
You need to enjoy it. Obviously, you don't want to lose capital. You want to take the volatility out of your decisions. You want to take as many volatility out of unpredictable stuff. Number one, I don't want to do dry land maize. I want to do pivots, because at least I mitigate some of my risk. But then we bought an olive farm down in Vorster, Willow Creek. And I told our investors, this dam at the back was never dry in 100 years. Believe me, the first year that I farmed, it was dry. I mean, and that is a clawback for me for the next 20 years. I think I won't make money out of that thing. And so volatility on or predictability on some of these stuff you need to take out. Obviously, you want to make a return. I can do with no sweat, go and put it on call account and make 7%. Why would I do anything for less than 7%? No sweat. Well, a little bit in South Africa, if the bank takes it and give it to somebody, that might be a little bit of a problem. But hopefully, 7% is a risk-free rate. So at least 12% return, 5% over what you, I think, without that. So the payable side, cash flow side, and then competitiveness. There's not much uniqueness anymore out there. I mean, there's 95 different olive oil brands in South Africa. How do you tell somebody your olive oil is better than the next guy's? And I mean, it's complex these days. So you try to get the trends right. In our history, we planted 34 different crops. We ended up now with 2. And decide that you need to master something and focus on it. South Africa, I think the protein play is unbelievable. We need protein. We do actually a great job. I think we're too hard on ourselves. John, I think we're one of the best agricultural countries in the world. I mean, I don't know, it's unbelievable, the value chain. And we are so competitive, and the allocation of our resources is amazing. I don't know, all we need is this huge potential sitting on debt capital in KwaZulu-Natal and in Eastern Cape. It's debt capital. How do we make it alive?
Jannie?
I think if people bring a business case in agriculture to us, it's got to be realistic. It's got to be fair. It has to recognize that it's heavy risk capital. It's not an existing business that you're selling that has got I don't think it's predictable anymore, but a relatively predictable revenue. And it's got to be addressed to your audience. You know, we've seen a lot of, and it's not in the maize industry, it's maybe more in citrus and other industries, where people are just looking for cash as an equity injection. I think it's a very dangerous thing to do because you don't realize that cash comes with a partner, and that partner comes with rights and a view of how long he or she wants to be in, and a
like
view
a
on
a marriage.
It's like a marriage.
It's a long-term
strategic decisions. It takes one corporate activity or big decision in the business to bring all of that out. It's a deep decision. And then for us, very importantly, is the social impact. And if I can add a bit to that, the universe of investors in higher risk agriculture is not that big. It's not an industrial company that you can go and source money for anywhere. So especially amongst the DFIs, the international DFIs that invest in faraway places, in create new agribusinesses in places that you would say, you know, how did they do that? They look very much at the social side, and we follow a bit of that model, and sometimes they spend more time analyzing the social side than the financial side. They obviously have a deep understanding and can quickly come to an assessment on the financial side. But I think you've got to, when you raise funding, when you present it to somebody, you've got to understand what's your audience, who are you looking for as an investor?
Can I add something to that? I mean, we understand the social side and we all do it, but imagine you've in Europe and you need to come and allocate capital to come to Africa, and we want people to invest in Africa, but this is just another tax. We created without having a pure focus on social. We added 1,000 jobs in the past 10 years. Direct jobs, not the multiplier, and pure 1,000. And obviously, by just paying tax and creating activity, the unseen advantages is so huge. We should not burden Europeans and Americans and all normal investors that say we need to have another tax added. And obviously we have a responsibility, but that's our responsibility as South Africans, Boere that had apartheid, and we messed up. We're sorry, but don't levy a tax on foreigners here to come and invest. They've got nothing to our history.
we need the capital.
We need the capital. We should be, please, 3 bags. No,
So can I just add something there too? So I think it's important for us, and it's something we've done through the years, very important point that Russell is making. The social side should help the bottom line of the business over time. What do we mean by that? I'll go back to the Eastern Cape. We have this resource there. Processed maize product, maize meal, comes from Gauteng. It's transported 1,000 kilometers to the Eastern Cape. At some point, the social side gets payback in terms of return when you start processing and distributing to markets. There are different models for
The
that.
community gets the benefit of the price,
And-
employment.
And the capital provider.
Yeah. Stephan, from an investor point, I want to change the subject slightly. A lot of people talk about structures in terms of tax and agriculture, and the term that's currently used is a 12J structure. Is that viable in agriculture? And just give me a bit of an idea where it will be suitable.
Yeah, so Section 12J is currently a tax incentive that's available in the market. It do have a sunset clause in 30 June 2021, and we really hope that government will not just extend that, but actually look at the policy around Section 12J to actually align it to achieve the right results, which they are looking at. So the type of investments, so agriculture is actually a very suitable asset for Section 12J. So typically you can use it for any business or smaller type of businesses where your asset value is less than 50 million rand. So that's in general kind of the ticket size that you're looking at. And it's a very good incentive. So essentially what it means is if I'm investing through a Section 12J fund or into a Section 12J fund with an agricultural exposure, the investor essentially gets a full tax deduction on that investment. So essentially, I almost see it not as a yield enhancer, but almost a capital protection mechanism, which Jannie has very correctly pointed out. The biggest thing is capital protection. So if you can go into an investment where you essentially get 45% if you're an individual and on that tax bracket back on your investment, then you've already de-risked yourself by 45% into those investments. So definitely there's different structures available that one needs to look at, and you need to be innovative and you need to ask people.
Is there appetite for that in the agriculture sector?
Most definitely, yeah. We've seen quite a lot of investments into agriculture through Section 12J funds. In fact, in our own business, I think we've made probably 10, 11 investments into agriculture through a Section 12J fund.
Any other questions at this point? Anybody with a question? Yes. The mic is on its way. Just hang on a second. There, on your right.
Is it on? Why do we commoditize food, which is what we have to build our health on, and accept American maize and grains into our market that makes our farmers uncompetitive without the subsidization that the government doesn't do here?
Just
Repeat the first.
repeat the question.
Why do we commoditize food and allow international exports to come into South Africa to compete with our local industries and not support our farmers in any way?
All right, so I'm struggling to find the real, is the question, why do we not subsidize our farmers like the rest of the world subsidize their farmers?
Precisely.
All right.
How do we stay competitive as farmers without our farmers knowing what the price of maize is going to be, and
All right.
they input and they produce, they get no security, no surety, and yeah, how do we, it just doesn't make sense.
Stephan, let me just answer that by a comment that was made on the first day by one of the farmers in terms of New Zealand. South Africa and New Zealand, and I'm not sure there might be a few other countries whose farmers are not being assisted by government, who has to compete technically with, in some cases, with a taxpayer in Europe or in America. And the point was made, the question was asked, it was a Labour government years ago that took away the subsidies, and 30 years later when they were asked, would you like the subsidies back, they said, no, certainly not. Because subsidies in theory creates inefficiencies. It creates allocation of capital that's not necessarily the right way. But where you do have a point is there is certain industries where you have to compete against a taxpayer assisting a producer in Europe or in America, but you don't have that assistance. There is that point.
Can I add to this? I mean, the chicken industry is a very valid thing, and we due for another increase in the duty, which we love as a pork farmer, because it will make pork so competitive, and sooner than later, there's distortions. So the big problem with tariffs, you don't see the unseen consequences in the long run on. We were never supposed to have a chicken industry because, first of all, a 1.8 kg bird is not competitive. We grow a 2.4 kg bird in Brisbane, and that is more productive because you sell the premium meat. At the moment, we actually hurting our cattle industry. We should, like somebody said, 42% of the whole herd is in black hands. Why don't we spend where we have an absolute advantage? We do not have an absolute advantage on chicken. We will never have, because we're not a surplus grower of grain. They're on export parity and so forth. So the unseen consequences of any tariff is very, very dangerous in this. I don't think as a government or anybody is clever enough to understand the consequences in the long term.
I think there is certainly a point where there is small-scale farmers' risk and volatility, where take-off agreements needs to be, could assist to a very large way, number one. And number two, I think when you want to create industries, there might initially be assistance required. But in the long term, if you look at the efficiencies in industries that subsidizes, it in the end, the unintended consequences is very big. But secondly, I think perhaps that's a question you can put to people like John Purchase of Agbiz and ask what's the risks and the hurdles, the unintended consequences of subsidies. Unfortunately, in South Africa, it's a case of allocating capital. But yes, our farmers have to compete with a subsidized, state-assisted farmer in America or in Europe. That's true, and I think the question that was earlier placed about milk from Poland, I wouldn't be surprised if there's some kind of assistance. Would you like to comment on that, Stephan, or have you covered?
I think I think what tariffs do is exactly like you say, is to make you inefficient. And what it has done from a South African context is actually making a lot of our farmers really innovative and really good at what they do. And that's why I've also said at the beginning, or some part of this discussion, that you do not want to be in that space where you're the price taker necessarily. But it has created quite big potential for us going out, because those who could actually deal with it in quite innovative ways, when they now go out to other jurisdictions, they can actually do extremely well.
All right. Any other question? I'm going to take one more question if there is, and then I'm going to wrap up with each of the speakers. Any other questions? Gone. Let me start with you, Stephan. Agriculture has the potential on social element, on a political element, on an economic element, to be a driver for South Africa going forward. What would you say is the hurdles or the concerns to unlock the potential of agriculture from an investment point of view, from getting capital, from making it attractive for investors? What would you say?
For me, probably one of the biggest issues is policy certainty from government, and continuing changing policies makes investment extremely difficult, because agriculture is such a long-term investment. You cannot be exposed to a changing policy every 3 or 4 years to begin with. I think there's a lot of regulatory red tape around businesses and actually getting businesses off the ground and to get your product wherever it is, or just to have your business being managed. So for me, that's the second biggest thing that can be changed from a policy perspective, is to make that regulatory burden much lower. And I mean, we've been talking about this not just in agriculture, but across the investment space. But for me, those are the two biggest things to actually get capital to flow into the industry.
Just a follow-on question from you. Is there sectors in the agriculture, first of all, the agriculture value chain or specific commodities that you're finding more capital seeking opportunities or not?
Absolutely. So any product where you have an export market, and as I've said before, where you're more a price maker, or where you can actually add value to your product as a result of, for example, information. People in Europe wants to know where the product that they have on their table actually come from, and they're prepared to pay a premium price for that. And if you can build that into your business, it's great. And it's definitely those type of businesses and investments there's a lot more appetite for, both locally and from offshore investors.
Jannie, in terms of your if I look at just last year, the transaction you alluded to with the silo transaction, the consortium you're involved in, I mean, that was real money. That was one can count that in billions. Surely you must have taken a view on the risks and on the opportunities. From your point of view, why were you comfortable to allocate that amount of money to silo, something you can't move out, you can't pack up and go, you can't sell. You're almost there forever and a day. What gave you the confidence?
We quickly understood the value of the asset, firstly, because its replacement value is so much more than its value as a business. And there's a huge barrier to entry with silos. With bunkers, it's different. We understood the challenges around grain and maize in the Eastern Cape, and saw the huge value that comes with storage and flexibility that comes with it, and pricing flexibility that comes with it if you're a farmer and a producer. And you know, the JSE certification of these silos and the role that plays in farmers' credit. It's a whole ecosystem on its own that farmers really depend on, and that we all depend on indirectly. So that was on the one hand. On the other hand, it was well operated. We quickly realized that the big variable is, you know, how much maize goes through those silos and through the bunkers, and we can take a view on it. And I think we are in agriculture. We had people like Stanlip with us that's in infrastructure finance, and they were comfortable with it, which tells you something more. So it wasn't that difficult, and it was well packaged and thought through.
I'm going to ask you the same question I asked Stephan. What can be done? What can be changed in the environment to create a more attractive agriculture community from an investment point of view?
I can only add to what Stephan said. I think he had very valid points. I think the one thing is we don't need subsidies. We need access to finance. We need access to informed finance. You know, the concept of blended finance has got a lot of merit, but it's got to be practically implemented and done and executed. The opportunities are there. The people that will help with that are there. But that's a big, you know, that'll stimulate a lot of activity in the sector. I think the sector is at a point where there's a lot of energy looking for solutions. And that gives me a lot of hope that, you know, there will be progress. But those pillars need to be sorted out first, and private sector will follow. You need to provide confidence to the sector. You need to address the tenure of ownership issue. That comes with the finance side. Those are the key things before any activity can start.
Russell, before I ask you that specific question, I'm going to turn it slight on its head. If you sit in front of the investor in Boston and you say to the guy on the other side, part of the portfolio will be in South Africa. How do you sell that, and how does that investor react?
Well, he said, no, thank you, because, I mean, the past 2 years, we were so excited. I remember when, I think I had 20 brandies the day when Ramaphosa came in and the rand dropped from 14 to 13.70. And I mean, and February, oh, this is going to be a great year. And all of a sudden you hear that they're going to take your land. And all fell flat on its face. I mean, the big thing is it's human nature. We can't get away from human nature. We're selfish beasts. I mean, I don't know if anybody thinks tonight if you go and lie, you're going to think about yourself and your wife and all that, and definitely not on somebody else. So human nature we can't change, and I wish socialism gets that in their mind, that we're not thinking for the common good. We're thinking selfishness. How do we manage that? We know that if I give a service to somebody else and I solve a problem, they will be prepared to pay. We go to Stephan for a solution. And he's not doing it really for me. He's actually doing it for himself. Invisible hand story. But, I mean, human nature is the fact for it. So that guy is obviously more clever than myself, and he would look at the risk. I mean, you can just go and say, what's the discount risk? So we can talk about multiples and so forth. Would you go and put money in Turkey today? Turkey, they're trading at the 3 multiple of EBITDA. I mean, they're not, selling companies at 7 or 9 or something. So there's a discount rate for risk. And why would you allocate capital where you don't know? I mean, take Neisner, the fires. Imagine you were Cup Industries and you had this timber there, it burned down. That was, I mean, pine takes 15 to 25 years. You need to start all over again. I mean, it's 50 years before you're going to see your return. People need to understand that there's something in the long run. And a big question I always ask, and it took me quite a long time to really go and distill it, was why did the Industrial Revolution take place in England? What was the conditions, the fertile soil that was created that humans started to develop? I mean, for 3,000 years, the per capita income was $800 per person. All of a sudden, from 1709, you see a rise in income. Why? And really do a lot of reading. I mean, society developed over 2,000 years. And you can put some dates. Look at 1518, look at 1689, look at 1707, and then 1709. I mean, all that incidents that human nature was activated through incentives of making his own decision to allocate capital and resources. So anything what we do in agriculture, obviously, it needs to be in our own interest. A farmer doesn't stand up 4 in the morning for the pleasure. Yeah, I mean, I don't know anybody really liking to get up at 4. I mean, it needs to be silly. But it's definitely to produce something, to allocate a resource. So from my side, agriculture is so exciting. It's a long-term game. There's nothing better. I mean, when I never realized this until we had a farm, and we bought it, say, for 100, and well, we bought it for 140 rand. We created in 7 years 140, 160 rands worth of income statement income. So we paid it off in 7 years, and then we sell the farm for 380 rand. So am I in the property game or am I in the income statement game? I think I'm in the property game. And agriculture is a long-term capital gain. And due to technology, I know, and due to population growth, I know that the value of the underlying asset will grow. It's a no-brainer. Go and buy land in Illinois today.
They don't make more of it.
They don't make more of it. And
well, thank you very much. Our time has run out, and perhaps just a closing remark from me. A number of years ago at the Berkshire Hathaway AGM, Warren Buffett was asked, what is a growth asset? Now, he believes that you should only invest in a growth asset because any other asset, you technically are going to lose. Inflation's going to eat you. So any other asset that's not a growth asset, you take risk for no return. Now, a growth asset, he said, there's only 3 growth assets in the world. And if you don't invest in those, inflation's going to eat you. It's a share in a quality business, equities, but a share in a quality business, commercial property, where the tenant can increase on a yearly basis and you can restructure it, or an agriculture asset. Those are the only 3 growth assets in this universe. And the rest, he said, things like, he threw in the same box, Bitcoin, gold, shark's teeth, old pots, coins, that's all the same. Your investment should be in growth assets. So from my side to the panel, Stephan, Jannie, Russell, thank you very much. I thoroughly enjoyed it, and thanks for your time and your input. Thank you very much.
Thanks, Theo.